I think what you want to see is that the first part of the year, so the first quarter, actually was a continuation of the very strong demand and the very robust economy we had throughout last year. And so on that strong demand, we were able to generate these really solid results. These results were also the fruit of strong preparation for what would come ahead that we knew was going to be bumpy. And indeed, following April 2nd announcement, things got a bit more bumpy. The key thing for us is that as it is today, this is mostly a China-US issue yet, and has not yet contaminated any of the other trade lanes, either from other origins and destinations with the US or China, or even for what the rest of the world trades together. So we continue for what represents 95% of our business to see actually strong volumes and unchanged demand. On the other side, it was the size and the rapid escalation of tariffs between China and the US has led to a sharp correction in terms of volumes on that part of the trade. Volumes have dropped between 30 and 40% between the beginning of April and the end of the month. And unless we find a solution there, the current level of tariff is simply prohibitive on both sides for it to really show some recovery. So a quite targeted impact so far, a measured impact also that has yet to contaminate things, a lot of volatility ahead, but something that we were prepared for, and that is reflected in the fact that we can, despite this increased uncertainty, maintain our guidance for the rest of the year.
Vincent, in that light, a brave man putting out forecasts in this environment, maintaining that forecast. But I can see where there has been some revision is in the global container market volume. That growth now revised to -1% to 4%. So still a fairly wide range here versus the 4% seen previously. So really baking in some downside. But if there is a solution, we know there are talks in Geneva on the weekend between the US and China. If things were to magically clear up and we were to revert to a lower tariff, would that change the forecast you're giving us today on this volume number?
So the volume range, or the large volume range, actually reflects the uncertainty. On the upper hand of it, you have basically a continuation. I mean, we expect the volumes in the first quarter to have been a bit above the 4% for that quarter. And so the wide range that there is if we can figure this out, if trade deals are being signed, if situation between China and the US is de-escalated, we are likely to see things catch up and growth be more on the positive side. On the opposite side, if things do not get resolved, if situation gets to be entrenched, we are probably going to see a weakening of the volume momentum that we have seen and continue to see in most of the world. There could be some contamination, and then towards the end of the year, that could increase some risks of recession here and there, and that is why we had to actually acknowledge some of these downside risks amid all this uncertainty.
What kind of changes in shipping patterns have you seen since April 2nd as companies try to navigate this uncertain period?
Yeah, so as I mentioned, the big thing has been the instant pause that companies have taken on their supply chain between China and the US. A lot of simply wait and see if this is going to be resolved, because at the current level of more than 100% tariff, either way, the commodities and the goods that are moving are simply prohibitive for people to import. So what needs to be imported it trickles into the respective economies, but a lot of wait and see, a lot of hope that this is temporary and that the situation will abate, and a lot also of right now of depletion of inventory currently either in China or in the US while you wait and see. A lot of research for where there could be alternative sourcing going forward if that situation was to get entrenched, which is not easy for every commodity. And we are assisting these customers making sense of the tariff rules and the changes in tariff rules that happen almost daily, these exceptions and these special deals and so on. And also to look at what type of sourcing opportunities they might have in order to safeguard their supply chain from some of these turbulence.